We just said it. It comes right in line with what was expected. What do you make of it?
I think this is fantastic in terms of the Fed thinking about continuing its normalization process. Powell has signaled that September is definitely a go for a rate hike. And if the data continue to outperform and we continue to have pretty, or rather few disruptions in markets, we may actually have a fourth rate hike this year.
At the same time, all the disruption about trade and things like that don't seem to be affecting any of this. Dana.
Indeed, and I think certainly for consumers, they're very much focused on the fact that they receive big bonuses as well as lower tax burdens as a consequence of tax reform. We've seen that consumers are actually out there spending their tax reform windfall. So certainly consumers are not really paying a lot of attention to the trade wars, even though they are concerned about it. And certainly we are seeing definitely some good news with respect to NAFTA, where the U.S. and Mexico kind of came towards an agreement earlier this week. And also maybe tomorrow, the U.S. and Canada will have hashed things out. So that will definitely help calm some of the fears that consumers may have in the back of their minds with respect to trade.
Well, digging a little bit with the consumers, I brought up disposable income. That's just gaining 0.2%, and the savings rate actually fell. Are we in a situation, though, where we have to be cautious of the wages not coming in, and in order to support consumer spending, we need to dip into our savings? Is that sort of a dynamic that's going to play out, or am I reading too much into it?
Well, the savings rate is kind of a complicated measure. And I think something really important we saw with the really big revisions that the BEA made to savings is that the savings rate has actually been a lot higher over the last 5 years than we thought. We thought it was, getting close to, 3%, and really it's been in this kind of 6.5% to 7% range. And so, 1 month where it's just off a little bit, I really wouldn't worry too much. And when I look at disposable income, it's actually been rising pretty strongly this year, and that's a function of, yes, the very strong labor market, underlying growth is very powerful and robust, but also because of tax reform. Consumers, most people are seeing somewhat larger paychecks. And again, when we take a look at consumer spending and we say, well, what if we just place a shock on income, a positive shock from tax reform, we definitely see higher spending. And we're seeing higher spending in the areas where our data say, yes, consumers are going to respond. They're buying autos. They're buying highly discretionary goods and services like restaurant visits. So I'm not terribly worried about one print when it comes to disposable income or even the savings rate.